Welcome to Startup Simplified, Ashok. Hi, how are you?
Very good. How are you?
All good, Chief. When did you reach Jakarta?
I reached yesterday night.
And this is your second trip to Jakarta.
This is my second trip.
How are you finding the place? Is it better second time or still the same?
No, I think it's, I'm getting to get a bit more feel for the culture the second time. So I think we're meeting a lot more people now. So I feel a lot more at home now than when I first came here.
So it's very similar to Mumbai. If you stay long enough,
Yeah.
you'll get the feel.
Yeah.
So it's actually very similar to Mumbai. Awesome. Welcome to Jakarta, Indonesia, Ashok. Let's get this started. So I know quite a bit about IDfy, but purely from the audience perspective, give us a brief about you, your journey, and the initial days of IDfy. Then we will get deeper into it.
Sure. So my background, I'm an engineer. I did my undergrad in the US, worked in the semiconductor space for close to about 5 years, building network processors in the US, and then came back to India. I worked for a startup in Bangalore.
Which startup was this?
This was a startup called Astuto Networks.
Okay.
And worked there for about a year and a half, then went on to do my MBA from ISB in Hyderabad. Met my wife there. So ISB is very close to my heart.
I'm sure.
There was a love story there as well.
So
post that, joined British Telecom in London. Worked there for about 4 years, then came back to India to start my first company. This is my second one, in fact. The first one was a bit of a dampener.
why would you do that? Yeah, why would you leave a nice cushy job in London and
You sound like my father.
Okay. This is a question which I'm sure your father would have asked. My father's asking me right now. Quite a few folks ask me, right? So I'm just pushing it back onto you. Why would you do that? How? And you were what, 25, 26 at that time?
I started the first company when I was 28, but I was still working at BT at that time.
Sure.
Came back to India maybe at the age of 30, and then IDfy happened when I was 32.
Okay. So there's been an itch to create something of your own very early in life.
I wouldn't say necessarily an itch to necessarily create, but what I realized was there's this one company I worked for in the US called Laurel Networks, and that was probably the best experience I ever had in the kind of work we were doing, but also we made a lot of friends. It was a very casual environment, and I always felt every other company after that wasn't the same. And when I came back to, when I was in London, my wife was working there as an investment banker, and I didn't particularly like London that much.
Okay.
So I gave her an option: we'll go to the US or India. If it's India, I'll start something. If it's the US, I'll work for somebody. And I think the idea was, can we create something, that kind of culture that we had in Laurel Networks? Is that possible to create? That's one part of it. I think the second part of it is, I did realize that there is a turning, like India is going through this massive transformation, or will go through a massive transformation. And I felt like, there's opportunity to kind of attack it and maybe create something meaningful. Not necessarily money, but as an organization, as being able to make a change.
Sure.
And that's sort of the intention, really.
Interesting. So IDfy, the one which I know today, wasn't the IDfy when you started back in 2014?
2011.
2011.
Yeah.
Okay. So what was the core seed of it?
Yeah. So IDfy to 2011, the concept kind of originated in the same kind of things that we do today. That kind of the way we look at the world and the way you look at the problem itself is almost the same, and from a conceptual perspective, or from what I would call a mission perspective. And the mission was always like, how do I eliminate fraud in transactions, and how do I establish trust in transactions, right?
Okay.
Now going back to 2011, and we were saying, okay, there are a lot of people who sort of lie and defraud the system, and as virtual transactions increase, how do you then create trust in a virtual world? You have to remember India. This is India when Flipkart had raised maybe $10 million. So,
Correct.
virtual world didn't exist in the sense that we think of it today. Ola maybe might have just started, or Uber had just started, and Ola might have started a year after, after we started. So there was no construct of what digitization meant and what does virtual transactions mean, but there's this thought that virtual transactions will increase. India cannot, you cannot do scale without being able to, completely virtualize the experience, right? And where you don't meet a person physically. Otherwise, how do you deal with 1.5 billion people? It's just not possible to have financial inclusion without that, right? But because there was very little that people are doing in terms of verification, what then I realized is where's the market? So we actually started with background verification, because that was a market where people were doing some sort of verification before giving a job. And so we were one of the first.
This was purely from a job verification
perspective. Okay. And we said, hey, let's put some tech here, because these were run largely as traditional background verification companies, which are doing it on Excel sheets, Word documents, and moving it from one agent to the other agent, and in case. And we said, hey, let me create some tech to kind of automate some of these processes. Some of it was just workflow automation, not even what you would call AI-based automation. Right? So we started from there. It's kind of looking back, it seems small, but that was a seed of what we built in the
space. Didn't really exist. It didn't have any automation whatsoever.
That's right. And even the RBI, for example, which is the Reserve Bank of India, which sets a regulation for financial institutions, still said that KYC had to be done physically. Aadhaar didn't exist.
Correct. Back
then, or barely even started.
Correct.
So if you look at most of what we are doing today, couldn't have been done in 2011.
Let's hear from you. What are you doing today?
Yeah, so we are the largest onboarding and KYC player in the country in India, and now starting to work in Philippines and Indonesia as well.
Could you expand more on what do you mean?
Yeah,
largest onboarding.
Yeah. So what we are, what we call is that we are an integrated identity platform.
Okay.
What that means is we will verify individuals for various transactions, where we control the full onboarding experience. So from collection of documents to verifying those to analyzing those documents and making sure they're okay, then verifying it against source, then looking at predictive modeling to say if is this person likely to commit fraud, to then signing those documents digitally, to then managing consent, because now there's a new consent bill in India which is called the DPDP bill. So everything has to be, it's exactly like GDPR. So we kind of cover the full end-to-end basis of onboarding for both enterprises, for merchants, for example, in a wallet, or an individual when he's getting a bank account, when he's taking a loan, when he's taking insurance, when he's renting a car, when he's playing a real money gaming on Dream 11. So we get involved in all of these. In terms of merchants, it might be when they're getting onboarded onto a platform like an Amazon, or if they're getting onboarded as a restaurant on Zomato, or giving out a loan as a bank, you're giving a loan to this merchant. So we get involved in all of these kind of use cases.
Let's take one process, right?
Yeah.
Let's take Amazon. I mean, I'm sure everyone's heard of Amazon, right? So let's take one process. You work very closely with them. From what I understand, it's for merchant onboarding.
So no, we do merchant, delivery executive, as well as customer, all three.
Three.
I'll tell you.
Okay.
We can go one by one.
Okay, let's do that.
In terms of a merchant, imagine a merchant getting onboarded. This merchant could be your merchant, offline merchant, like a guy who's supplying something to you, or an online merchant who's on the platform, right? So there's a set of verifications that you'll need to do on this merchant. You might want to make sure that his documents are sorted. Is he registered with the government in some fashion? It could be the identity of the merchant itself. Is this a director of this company? Has this merchant then committed fraud in the past? Does he have a criminal record against him? So what it starts with is actually, first step is to collect documents. And this can be done in two ways, either through an assisted journey where it's a video-based collection of documents where an agent of Amazon could be collecting these documents on a video call, or a fully self-serve journey where the merchant is literally just
on a
clicking,
video call.
or clicking photos on his phone. Once he collects all these photos, this is, let's say, our platform which is powering this. Then all those documents are then authenticated to make sure they're not tampered, they're all legit. Then the data from that document is verified from source. Then we look at the person, the merchant, the sole proprietor, and make sure that he is connected to this entity. Then we say, oh, okay, cool. Now you can just sign this document using e-sign, which is Aadhaar-based e-sign, and we can get all this consent right there on that journey.
Sure.
Right. That is one type of journey. On that delivery executive side, pretty much every single delivery executive in the country is onboarded using the IDfy platform. Here, very interesting story. Initially, what would happen is the delivery executive onboarding would happen at a warehouse of Amazon, and they would have 1 or 2 centers in a city, and they would go physically and give those documents. Those documents, photos would have been taken and passed to us for verification.
Sure.
During COVID, very interestingly, what happened is obviously they couldn't do physical onboarding. So Amazon just asked us, hey, how do we do this? And we said, hey, cool, why don't we do this? Why don't we do the onboarding through a video based onboarding, where an agent of ours will do this while from a remote basis.
Sure. So before this, you did not have video KYC.
We did. We launched video KYC with a bank first, and then we just suggested that since why we can use assisted thing because we had the platform.
Yeah.
And we said, cool, we'll use the video based onboarding to onboard this merchant or this delivery executive remotely. So we launched literally about 180 cities overnight because of this way of doing collection of documents.
Yeah.
Right. So Amazon could actually launch during the pandemic in all these cities delivery processes. Right. So that is, and all of those are then verified against different sources, like a criminal record check, like an identity check. We might do an address check. All of that is done within the platform itself. On the customer side, let's say like an Amazon Pay, where you're giving a loan to a agent, to a customer, or where you're onboarding him for the wallet, there are some minimum KYC requirements there as well. You would then do the identity check, and starting from video, in fact, video-based onboarding. So video KYC is the way that we run this. We do close to about 65 million authentications a month today. That's close to about little more than 2 million a day. It's scaled up significantly, significantly in the last 3 years.
Most of these changes within the offerings happened during COVID?
No, so our products, the KYC products were launched around 2016-17.
Okay.
But the scale happened during COVID and post-COVID, because if you look at most of the bank account openings still happened physically until COVID hit. And when it was not possible to do it physically, that's when the banks and the fintechs kind of decided. Fintechs had already decided that they wanted to do it digitally. The banks started to move towards this because there was no way that you could give a loan.
True.
If you needed people to come to your bank or a branch. So that's sort of the turning point of this move towards digitization. And in all honesty, if Aadhaar had not happened, if telecom prices had not dropped to the level they are today, if UPI didn't exist, I don't think this would have been possible. So a lot of this is on the back of a lot of the fundamental infrastructure changes that the government has been doing for the last 10 years. So this is what is happening today is what 10 years of work that India did, which made it possible. So now today, for example, 70% of Indians have a bank account. Maybe they may or may not use it, but they have it. This was only like 20-30% in the beginning of the 2011s, 12s. So that transformation, without that transformation, this could not have happened. What happened to us?
Interesting. Okay, so I think this naturally leads me to Indonesia.
Yeah.
Right. Indonesia, the way I see it, it's on a cusp of a similar revolution when it comes to bringing banking to the unbanked.
Yes.
The large number of fintechs out here. Yeah. Even the regulations which are moving towards enhancing the banking experience and also bringing the unbanked in the umbrella, right? So how do you see this as a region, right?
Yeah.
Why, number one, why Indonesia? Because I think Indonesia, I think the whole expansion out of India, it has happened very recently, right?
Yeah, last 1.5 years, yeah.
Right. So what I understand from your other teammates that you started with Philippines and Thailand, and now Philippines, rather, right? And now there is a massive conviction and bet which you're taking on Indonesia.
Yeah.
Where do you see Indonesia right now?
Yeah.
And what are your plans for Indonesia? How do you plan to expand into the country?
Yeah, I think Southeast Asia is very interesting for 3 reasons, and I'll keep it broad for a second before I go to Indonesia specifically. I think if you look at where these countries are, like it's similar in some sense to India, in the way that how do you penetrate to like enable loans to the unbanked? How do you enable financial inclusion? How do you digitize? Because with digitization comes scale. With digitization comes GDP expansion.
Correct.
I think these countries, especially Indonesia, Philippines, India as well, are going to leapfrog technologies significantly than what I would see in what we would call a traditional first world country.
It's a very standard example, right? You look at the banking as a whole in India.
Yeah.
Compare it with the US.
Yeah. It's today I'm proud to say that we are maybe 5-6 years ahead.
Absolutely,
right?
Absolutely.
Be it UPI transactions, be it the ability to open a bank account digitally, be it being able to analyze data, and even for that matter, India now has a PDP bill, which is data protection bill,
correct,
which is protecting your citizens as well. Which today technically US has somewhat of it, but it's not really, right?
Really.
Europe has a great one, which is GDPR. So if I look at what we are doing as a country, and then expanding that to what Southeast Asia is trying to do, and places like Indonesia has already moved forward in some of these things, is about making that last mile transaction happen, and it will happen because of 3 things, right? And I was reading this book on how Nandan Nilekani did this thing, and he said first step was identity, second step is to get everybody a bank account, third step is to make sure that the telecom industry, the prices are low so that people can bank using data.
Correct.
Right? But obviously that happened because of Geo and etc. Then fourth step was UPI, which is bank to bank transfer direct,
just with phone number.
With the phone number, right? And not through a wallet in between. It was bank to bank. These are infrastructure plays that are enabling financial inclusion, right? And that is the high level view.
Sure. So just for the audience, right? Because I'm sure we'll mention UPI a few more times in this conversation. Quite a few folks might not be aware.
Yeah.
So do you want to take this up? You want to explain what is UPI in as simple language as possible?
So UPI stands for Unified Payments Interface. Essentially what it is it's open standard, which NPCI sort of moderates. It's a way for one bank account to be able to transact with another bank account. So every person who has a bank account has a way to identify his unique identity. There's a short code. So when you can either transfer to a short code, they get a unique QR code or a phone number which it's linked to. So you can literally transfer money to each other direct from one bank to the other bank. It helps in 2-3 ways. One is there is no wallet in between. So as long as you have a bank account, you're good to go. Second is from a government perspective, when subsidies are given to farmers, it goes directly from the government to the farmer without any middleman. So it actually increases speed of transfer, and also improves efficiencies.
Sure.
That has been the fundamental turning point for payment transactions, digital payment transactions in India. Today, you can go to the smallest vegetable vendor, and he would have a QR code, which then I directly transfer to his bank.
We recently had this amazing video of the foreign minister, some diplomat, German diplomat, buying a fruit from a vegetable vendor, and making payment through through scanning
a
QR code. And it was so exciting to see him so amazed.
Exactly.
By it.
Exactly. And the beauty is that the banks actually talk to each other in the same language.
Yeah.
So now, without that standardization, it was not possible.
Sure.
The wallet world does not solve for this, right?
Yeah.
So then that's the big transformation from a UPI perspective. Now there are other sort of things that the government is launching. One is account aggregator, which is a way to analyze data from one bank to the other bank. So if you're taking a loan from bank A, but you have bank account in bank B, how bank A can ask for data from bank B directly. So now that also kind of improves efficiency and reduces fraud, right?
Correct.
The moment you reduce fraud, suddenly banks are open to taking more risk.
Correct.
When they're open to taking more risk, it's not risk anymore because they're just more open.
Correct.
Then inclusion increases, right? So that's what I see as potential in these countries, and they will leapfrog because we are moving from generation 1 to generation 5 practically overnight.
Correct.
Versus like a US, which had to move, now they're in generation 2 or 3, and moving to 5 is difficult because there's existing infrastructure.
Correct.
We didn't have any.
Very heavily invested.
Very heavily invested and vested interests of many parties.
Of course.
When you're moving from Gen 1 to Gen 5, it's easier for us. And that's kind of what happened in the telecom world as well.
Correct.
We launched a lot more 5G infrastructure than any country in the world.
Correct.
Because we didn't have to worry about the old infrastructure because we didn't have any.
We didn't have it. Yeah.
Right? So I think that the leapfrogging can happen in these countries, and that is one.
Sure.
Second, I think from an Indonesia specific thing is just the population. It's almost 300 million people. This is between, if I look at Southeast Asia, India and let's say the Indian subcontinent, you have 2 billion, 3 billion people, like 2.5 billion people, right? In this area.
Correct.
Which are going to now become largely middle income countries from lower income countries.
Indonesia specifically, it's one of the fastest growing in terms of GDP.
Exactly, right? So these countries are going to become middle income, if not already almost there, in the next 5 to 10 years. If that is going to happen, the amount of transactions, the amount of loans people are going to take out, because loans create wealth, also, right? Because people are going to buy more things. It creates an impact to the GDP because, and I feel by doing these digitization trend lines, it increases wealth as well, because without that, how do you do it?
True.
So I read this one note, GDP multiplier on a loan to a merchant, for example, in India. For every dollar, it's $1.50 that you is a GDP multiplier, right?
Wow.
So if you and India has a $1 trillion credit gap, that means by just enabling $1 trillion in credit, you're increasing your GDP by 1.5 trillion.
1.5 trillion.
And that is recurring. That is compounded.
Correct.
So within 5 years, that gets compounding. So that's sort of the space I think it enables in these kind of countries is just the ability to scale up very, very quickly.
Sure.
It's not possible in most.
What kind of product offerings you're bringing to Indonesia? You're pulling in the whole stack?
We're pulling in the whole stack. We want to go deep in Indonesia over a period of time. By deep, what I mean is we are not a company which is just coming in and flying out and working from India. We want to be Indonesian. So we will focus on setting up entities here and going as deep as we can go on an individual verification. So we don't want to launch 25, 30 countries every year. That is not the intention. We want to launch 2 or 3 countries every year, but go very, very deep into how do you enable credit, right? And by enabling credit, what we are solving for is only risk and fraud.
Sure.
Right.
Sure.
We are not going to
lend them.
We are not going to lend money. That's what a bank does. That's what a fintech will do. We will focus on just solving for that one problem of fraud. Fraud and risk.
Sure. So, I mean, generally, in my experience, again, very limited experience, what I've observed that SaaS companies or the company like yours, they generally tend to expand either once they have captured the home market, or the home market hasn't really accepted the product, right? Thankfully, in your case, my understanding is that you pretty much lead in the home market, which is India, right?
Now, these are two very different geographies. The reason why I'm asking this is because there's been a lot of success out there in India. Although Indonesia might seem or sound very similar, it happens to a lot of entrepreneurs, especially who are coming out of India. They feel that, hey, listen, it's very similar to India. Let's apply the same yardstick, let's apply the same rules and let it going. And then it almost never works. It takes a year or two of learning to actually get acclimatized to Indonesia, right?
Now, for you, someone who's entering Indonesia, what kind of study have you done? The reason I'm asking this help anyone who's planning to venture in Indonesia. What kind of study you've done?
So I think, so we launched Indonesia maybe, or we are doing a bunch of POCs with some customers now. We probably just went all in on decided to do this maybe about 6 or 7, 8 months back, maybe 8, 9 months back. But we visited India and started doing recce almost a couple of years back.
Nice.
Right?
Nice.
So not just me, but our chief business officer Riju as well. So we have what we realized is we want to first come and check the place out. So when we launched Philippines, I did the first recce in 2017.
Okay.
Or 2017 or 18.
Okay.
This is pre-COVID, right?
Sure.
And we launched only like a year and a half back.
Sure.
So we are trying to make sure that we understand the market before we enter, number one.
Sure.
Number two, we generally obviously feel that large populations is a good bet for us. So overall, from a macro perspective, it is given that Indonesia is a superb market.
Sure.
How are we going to execute might be a very different thing because culturally, Indonesia and India, for that matter, Philippines and India are different, and that will be the case with any country we go to. So
I mean, everything is different. The reasons why they lend.
Yes.
The reasons why they take debt.
Yes.
The way they spend the money which they have which they have incurred.
Yes.
It's very, very different.
India is a savings economy. Philippines and Indonesia both are a spending
economy.
They do like buying stuff.
Correct.
And that also kind of translates to cultural nuances of how do you look at the world as well, right? Because versus India, which is probably a little more what I would call cautious, versus Indonesia, Philippines might be a little more bolder, right?
Bolder is the right word.
Bolder, right? And we can see that, right? And so that's why I was kind of saying that we don't want to launch 15 countries. Lot of companies make a big mistake of trying to launch 15 or 20 countries simultaneously. First of all, I don't have that kind of capital to launch 15 countries simultaneously.
We'll come to that.
But having said that, I don't think I would want to.
Sure.
Because you have to learn how to crawl before you start to run, or start to walk. You need to learn how to walk before you start to run.
Have you learned this a hard way?
In India, we did, right? Like, I mean, we learned it very hard way, right? Like,
Let's talk about that.
Yeah.
Let's talk about that.
So
in hindsight, it sounds like a massive success story where you were down there and you picked yourself up and you are here. It is one as well. But what people generally don't understand is that how lonely it gets when you're out there and how tricky it gets to come out of it.
Yeah.
So I would want you to focus a bit on that as well, right? Because we have a lot of budding entrepreneurs on this podcast listening to it. So I want them to get an idea of when it's really down, the chips are down, what happens?
Yeah. So let me take a step back to 2012 when we raised our first round. In those days, you didn't raise a lot. You couldn't. There was no VC. First of all, there's no VC ecosystem. Or there was VC ecosystem, but it was a tiny ecosystem. So I raised a total of about $120,000.
Okay.
Right. And we kind of ran out of that money in about a year and a half. So we made it last year and a half, which is
pretty good.
Which in today's world I wouldn't have been able to do.
Sure, I'm 100% sure you
right?
will be.
But we were able to make that run for a year and a half, and we hadn't hit success yet. We had not hit product market fit yet, and I remember telling my team at that time that, hey, you know, I looked at our bank account and it didn't look like we were going to get capital in very easily. So I told my team, hey, you know, we have 2 months of money left. If you guys want to, you know, leave, I completely understand, I respect it, but I'm going to try to run this for a little longer. And I'll tell you the next statement they made. They said that if the ship is going to sink, we'll sink together.
Okay.
And these 12 people that I really respect, and this is the reason that IDfy exists in the way it does today, basically told me that, you know, don't pay us until you and we'll stick it out. Just like you will stick it out, we'll stick it out. And I remember asking why, and they said, this is the best company I ever worked for. I don't want it to die.
Wow.
Right? And you know, fast forward like all these years, every time there has been a problem, and this has happened 4 times, I remember those words. Is that we are doing something special. We're not doing, it is the business. Obviously, we're helping people get more loans, and customers are important and all that. But the real reason that what keeps me going is the team. And what kind of culture we have built. It's hard to build great cultures. And when you're down in the dumps, you look around and you need to see those people stick around and fight with you. So I have this analogy is that who are the people in your corner when you're boxing away and getting, who can you tap to bring them into the game and take that game forward, right? And that's where I have my management team. There's Riju, there's Ashish, there's Paritosh, who are that team for us. And then people like Jagan, who's sitting right in front of me here. And each of these people, we have taken a lot of effort to hire great folks, and we take a long time to hire. But that is what keeps you going, is not necessarily the business, because business can go in the dumps at times, but to be able to pivot, you need a village to back you.
Sure.
So that's, I think, one part of it. And that has happened like 4 times. Once in COVID, once during COVID, once in 2012, 2015.
Did it ever cross your mind that, hey, listen, let's just move on? I mean, 4 times.
Yeah, it keeps crossing my wife's mind.
Okay, sure.
Right. Every time there is a struggle, you know, she goes, hey, why
are we doing this?
Is this worth it? She you know, she was earning, I was burning, so that's how it worked in those initial days. So she's an investment banker, so she obviously earns well, and then I was burning cash, so that's how I ended up coming to Bombay as well.
The culture, sorry. So
yeah,
let's talk a bit about culture. So unfortunately, I personally feel that culture is one of the most abused words.
Yeah.
In the last few years, especially by startup founders, as well as venture capitals, to be honest. I believe everyone means something else by culture. Unfortunately, it feels to me, because once you see the operating models and the overall behavior as such, it seems very different to what they are talking about. What does culture mean to you?
So culture is it's a feeling. It's not something which you can define, right? Like, and I'll tell you what that means also. It is what lingers when you take the business out of it. Like, you know, like forget about how much money I make or how much money the company makes. You take all of that out. What is left is kind of what culture.
That's a good definition.
Right? And by that I mean, what happens when you're in the dumps? What happens what do people do when you're not around? How are they motivated? Number one, are they doing it for the money, or are they doing it for something more? Take the money out. What happens? What happens, right? And that's why those 12 people mattered so much when they said, like, we'll sink with the ship. You know, we're not running away. We're not those rats. And I don't think consciously you try to do something which gets you to say that, hey, this is what I mean by culture. There's no like Bible I wrote, or you know, where I said this is what culture means. But it ends up like every family, right? When you're in a family,
correct.
If somebody says, what does your family really mean? Can you actually put it in words? You can't. Nobody can.
Exactly.
But when you're together, you know that you're going to have a lot of fun, especially if you have a fun family.
Yes.
Like mine is a bunch of ruckus. It ends up becoming big ruckus in our family because we are one of those
That's a different podcast altogether.
loud. This thing, we have so much fun, but you can't put it in words.
Sure.
Right? But if I look at the basic, if I take the emotions out of it and say, okay, what does that translate to? It translates to high amount of ownership. It translates to where us as senior leaders are able to, sort of not make every decision. So distribution decisioning is what I call it. If we are holding all decisions, then people are not going to feel empowered. If they're not empowered, they're going to quit.
Correct.
Right? So we have very low attrition rates as a result of this, because people feel super empowered. They feel like they're getting to do things and trying new things. It means that if you have a failure, nobody's going to beat you up at IDfy. Don't do the same thing twice.
Of course.
Because if you're not failing, you're not trying hard enough.
Correct.
If everybody is just doing is succeeding all the time, then you've not tried hard enough to do something more out of the ordinary.
Correct.
So for us, the whole idea is how many moonshot ideas do we have and things like that. So this is what it translates to, but it's hard to define it.
Sure.
From a
Culture.
culture perspective. I would say the one thing for sure is all decisions are not mine.
Good.
That's step number one.
That was good.
I probably 90% of the decisions I don't make.
Sure.
And people in our company can tell me to go fuck off.
Okay.
To say it in those terms.
Sure.
And these guys do all the time.